All right, we will go ahead and get started as folks start to trickle in. Hello, everyone, and good afternoon. Thank you so much for joining us today for our payroll learning session on W-4 completion and multi-state tax. We're excited to have you here. My name is Brittany Phillips. I work in the benefits unit in human resources, and I'm here today to just help moderate this Zoom call for our payroll team. As I mentioned, this session is all about helping you feel more confident with your payroll and tax withholdings, walk you through the step-by-step guidance on completing your W-4. And then if you've ever wondered about out-of-state tax obligations, you are in the right place. Our presenters today are Jacqueline Derrick Hurl and Matthew Miller, two of our amazing payroll accountants. They'll share their expertise and tackle your questions along the way. Speaking of questions, we encourage you to add those to the Q&A function as they come up. We'll address those at the end as time allows, and we'll pause periodically as we go through to address them as well if they are applicable to what we're talking about. Quick note, the session is being recorded and we'll make it available on the HR website probably within the next week or so, so you can refer back to it if you need to. All right, we'll dive in now. Jacqueline and Matthew, take it away.
Thank you, Brittany. So as Brittany said, Matthew and I are with Central HR Payroll. So here's just a brief overview of what we're going to touch on. Who is payroll? How to find your forms. Why we have changes from 2020 on the W-4. How to update your W-4. Then we'll briefly touch on state withholding certificates, go on to out-of-state employees, and then we'll finish up with a quick reminder about addresses and pay advices. Processing team, our team of 9 staff members work to ensure accurate, timely, and compliant payroll practices for more than 22,000 employees. We are in all 50 states, including DC and Guam. So for all your employees out there, we have employee self-service. When you log into this, into your human resources porthole, personal information, employee information, to your direct deposit information, right underneath where you can see your pay advices is your W-4. Anytime you want to check this to see what you're claiming for your taxation, you can go in there. And then right below that is the tax form for W-2s. This is a common confusion for people, is that your W-4 is an IRS form that the IRS provides for you to fill out so that your employer, CSU, can accurately withhold your taxes. The IRS does not actually see this form. It's just for us to know how to calculate your taxes on your pay advice. Your W-2 is the yearly report that you get, the form that does actually go to the IRS, and it shows what your taxable wages are, how much was withheld, all that information. So just recently, the HRIS sent out an email for all of those that have not elected to have their W-2 delivered electronically. I just went out this week. We strongly suggest that you choose to have it delivered electronically if you're okay with that. It's more secure and you get it faster. So it went out just this week, and another similar email will go out at the 1st of January so that you can get your W-2s in employee self-service. You get them ahead of time of the ones that have to go out in the mail, of course. And those W-2s are available at the end of January 2025 for the tax year of 2024. So I know a lot of you, sorry, trying to move the little picture. I know a lot of you are used to the W-4 from way back when, like when I started, where you filled out your information and you chose allowances. You chose one, two, whatever it was. Um, Due to the Jobs Act in 2018, the IRS revamped the W-4. And the way it was billed was that it was going to be easier. And I know a lot of you out there are probably going, no, it was not easier. I agree, it was not easier. What they should have said that it was going to be more accurate. So the changes of removing the selection of allowances and allowing you to figure more what your deductions are going to be and what your credits are and what your liability is so that your taxation can be more accurate for when you file your return. And so they came up with a new one, but you didn't have to change. You never have to submit a new W-4 unless you're starting a job or if you're claiming exempt. If you claim exempt, the IRS doesn't want you to forget about that and possibly have something change in the next year. Oh, a huge tax liability. So that is the one time they require you to actually fill out a new W-4 every year is if you claim exempt. And here in Central HR, we send out an email at the beginning of the year for all those people that have claimed exempt and have not changed it to remind them to do this. So now we're going to go through a side-by-side look of updating your W-4 for those of you who do want to do that. And we're going to talk about the paper one, and we're going to talk about the employee self-service. So if you're going to fill out the paper one, you can find it on the IRS website, www.irs.gov. Type into, they've got a nice search engine. You just type in what form you're looking for and they'll bring it right up. Here at CSU, you can put it automatically into employee self-service. It loads automatically up into Central HR and it's available almost instantaneously. So on a paper W-4, the very first step one is to fill out all your personal information, your last name, your first name, your social security number, your address. Of course, in employee self-service, we already have that information for when you were hired. It was automatically uploaded from your paperwork. So it pulls that information. It's already filled out for you. Line C is where we start making decisions. Line C is you have to choose your filing status. With the new form of 2020, the filing status are single or married filed separately. It's pretty straightforward. Married filing jointly or qualifying spouse, surviving spouse. Qualifying surviving spouse, that's usually if you have lost your spouse in the last year. But there are certain regulations you have to hit to be able to claim that. So you'd have to go look that up if you meet those regulations. So, or you can claim head of household. And again, that's another one you need to go and look up your specific situation of whether or not you meet head of household. This is usually single parents, but it's not always due to how divorce decrees are written and things like that, or if you're providing the bulk of the care for someone. In employee self-service, you click on the little button of whichever one you are going to claim. And then we move on to step two. Step two is the most confusing one for everyone. This step two is if there are multiple jobs or if a spouse works. So the first thing you're going to ask yourself is if you hold more than one job at a time. So if the employee I know we have a lot of students out there. If your student is working for you and has another part-time job at Target, they have two jobs. Or if you have an employee that is married and their spouse also works, that counts as two jobs. So when those jobs are added together, when you file your tax return, we want to make sure that your withholding is correct. If you only have one job and if you're not married, your spouse doesn't work, you can skip this step. Doesn't apply. So if you have more than one job or your spouse works, it's recommended to use this step. You can either use the worksheet that's on page 3 and 4 of the W-4 from the IRS, or there's a little box that you can click to kind of do the simplified method is how it works. So.
And Jacqueline,
Yes.
there's some questions related to the two jobs piece. I'm not sure if you can address them, but I'll ask them out loud so we can at least direct them to the right place. Does an independent contractor count as having another job? And then similarly, if the other income is not necessarily a job, but consulting or variable, are those counted as a second job?
That's going to be on an individual basis of how you want to have your withholding done. We here at CSU, any employee at CSU is prevented by law for giving tax advice, as we're not tax preparers. So I would really suggest going to the IRS and using their calculator to figure withholding, or to consult a tax advisor for both of those, or for those situations.
Great. Thanks, Jacqueline. This is slightly unrelated, but probably helpful too. There's some like basic level tax advice services available through the EAP at no cost. So that might be, if it's a simple question like that, something you'd want to utilize, and you can certainly reach out to our office if you need more information on that. We'd be happy to help. Okay, back to you, Jacqueline.
Thank you, Brittany. And along those lines, also we're going into tax season. The IRS offers, and they changed the name of the program. It used to be VITA, VITA, and they claim that it's for retirees and it's no cost to come and ask questions and to get help with simple tax returns. But anyone can use it. You don't have to be retired to do it. You just have to check I know they meet in Greeley. They've met here at CSU a couple of years ago. I don't think they use the CSU campus anymore, but you can always go and check the internet to see where they're meeting as another option. So if you do have two jobs, or you have a spouse that works, you can use this table to find your annual amount and divide it by the number of pay periods in a year. So if you're a monthly employee and you get paid 12 times a year, biweekly you get paid 26 times a year. And it's just basically lining up the columns. So you're going to choose on the left-hand column, you can see the higher paying job, annual taxable wage and salary. And on I guess those are the rows, and then the columns across are for the lower paying job. There's 3 separate tables, depending on how you filled out that step 1C of single, married, or head of household. And then if you have more than three or more jobs, it's not just two, then there are instructions on the worksheet on how to complete these accurately, again, because it gets a little bit more complicated. So we'll go through a quick example. So if you have an employee who makes $120,000 a year and they're paid monthly, and then their spouse only makes $35,000 a year, maybe they're only working part-time or they do something different, and they intend to file jointly, then you would go and you'd look up the 120,000 on the left-hand side, which is the bottom row, and we'll go over on top to the where 35,000 is. We'll meet where those two meet is 7,540. If this person's being paid monthly, we're going to divide it by 12. And then that's the amount we're going to put on line 4C, which is going to have an additional amount withheld on top of their regular withholding. So this is our system's going to figure out what their taxation should be on 120,000 a year as married, and then it's going to take that additional and put it on top of, and that's what their taxation for that pay period is going to be. This ensures that they're not going to owe a huge amount at the end when they go to file in April. So the employee's spouse can then, the one who's making 35,000 would select married filing jointly, and then they would skip line 2 because we've already taken care of it on the employee's W-4, or yeah, step 2. So that takes care of step 2. Step 3, we're now going to look at the credits. So if your total income will be 200,000 for a single person, or 400,000 or less if you're married jointly, you get, when you file your tax return, there's a credit. And credits, the IRS considers a credit one that reduces taxes dollar for dollar. It's not reducing your taxable income, it's reducing the actual tax amount. So for those of you that have children that are under 17, there is a tax credit of $2,000 for each individual child that meets that criteria. So you would multiply the number of children that you have that qualify for that by 2,000 and enter it on that first line on step 3. If you have other dependents that are not necessarily under 17, they could be someone that, like I stated before, like my daughter is taking care of someone that's a dependent, or it could be a child that is still going to school at 18, or you'd have to, again, go to the IRS website and find out what those dependents could be. You multiply that number by 500 and put it on the line, and then you add those two together and put that on line 3. So step 2, we increased how much we're going to have a taxation. This is going to decrease how much taxes we are withheld on a paycheck. So if it's $6,000 and you're going to get paid an amount, and then the system has figured out, and it says that your tax for that month, you make a ton of money, so it's going to be $10,000 for just that month. It's then going to look at the 6,000 on here, and it's going to take that out, and it's only going to tax you the 4,000 instead of the 10,000. So this is going to reduce the amount. If you're in employee self-service, you don't have the 2 lines. You're just going to have to write it down on a piece of paper, do it in your head, however you do that, and just enter the total on the line where it says enter the total here. Then step 4, this is optional depending on your circumstances. This is where you would normally enter that other income. the independent contractor, the investment income, if you have a rental, whatever you might have. This is where you would enter that amount on line 4A. That's the what you want added to your wages for your taxes to be calculated. 4B is if there's any other deductions that you might want to be using. The IRS on a tax return has a standard deduction. It has a standard amount that applies to all single people or all married people. But many people have paid much more than that. So what they call itemized. And if you're going to itemize, you put those deductions on 4B. 4C is where you entered that number from step 2. And this is the amount it's going to be withheld from every assignment and payment. And so this is where it gets a little tricky with CSU, especially with our students. A lot of them will have multiple jobs on campus. They may work for the student center and they may work for engineering both. When their pay is figured, it's figured for each assignment separately. So their student center job is figured, and then their engineering job is figured. But then when the deposit is made, it's put together and it's made as one deposit, but it's actually figured as 2 separate payments. So if you decide to have extra withholding, if you want an extra $20 withheld on top of your regular taxation, it's going to take an extra 20 on that student center job, and it will figure an extra 20 on that engineering job, even though it's the same pay period. But because it's both jobs, it's going to take it from both. So keep that in mind when you're filling it out. Maybe you only want $10 from each instead of 20. Or maybe you do want 20 so that you know you absolutely are covered for taxation. Also, if you get anything extra, so our monthly employees, if you were to get an award, it's going to come out of that award and your pay, because that award is paid as a separate payment. We don't do a lot of extra payments for our monthly ones, so it doesn't apply near as much, but do consider that it's going to come out of every single time. And then if you're going to claim exempt, as I said, this is the one time that the IRS does say that you have to fill out a new W-4. You can elect to be exempt from federal income tax withholding by checking the box in employee self-service. On the paper form, you have to actually write it in. There's not a box. You just write it under the space of 4C. That the IRS Advisory Board has made a recommendation that they put in some sort of box for that instead of just writing it, but those recommendations won't be implemented if they're accepted until 2026. So this might change, but right now you just write it in somewhere under that 4C. In employee self-service, you check a box. It's not common to claim exempt. You should only consider doing exempt if you had no tax liability last year and expect to have no tax liability this year. And this doesn't mean that you received a refund from your taxes, but that you actually owed 0. You had no income that was subject to federal tax income. So your adjusted gross income, taxable income came down to 0. As I said, the election expires each year and needs to be reelected before February 15th. So we will send out an email to everyone reminding them to do this. If you don't change your or update your exempt, I mean, you can still claim exempt, but if you don't update it for the new year, by law, we have to switch you to withhold at the single highest rate. And with the W-4, it's going to ask that you agree after you've made all your changes. You're going to click continue, and then it's going to look like it's done. It's going to show you what you've done, and it looks like it's done. But please remember to click the submit in the top right-hand corner, or else it does not save those changes. So
If you'll mute us.
I'll mute. Matthew's going to talk to you about states now. Before we do, Brittany, are there any other questions about the W-4 that we need to answer real quick?
There are just two right now.
Okay.
The first is if an individual skips the steps or the lines that they don't qualify or don't need. So like the additional amount withheld, can they skip that?
Oh, yes. Yes, as I said, this is a form from the IRS for us to know how to withhold per your request. It doesn't go to the IRS, and the IRS really doesn't care what you put on it, honestly. I mean, they do, but they're not going to be checking it. They're not going to, be checking, looking at your return going, you got $10,000 back. Your withholding must have been wrong. The only time they do that is if you owe a ton of money, and it has to be repeatedly.
Yes. The second question is about divorced parents who alternate claiming their dependent children. Do they have to update their W-4 if that's needed every year?
Nope. Not necessarily. As said, you don't have to update your W-4.
Into my favorite topic of state withholding. So since we're in 50 states, DC and Guam, kind of varying, but generally, we want to make sure that we cover the state withholding for employees. Most states are going to have their own withholding certificate, so it's going to be like the state version of that federal W-4. Since each state or each of the certificates are going to be a little bit different, we're not going to be stepping through the directions for each state. That would take a very long time to get through 50 states worth of deductions. For Colorado employees, the Colorado State Income Tax Withholding Certificate is available in employee self-service. To get to it, just select state when you're viewing the W-4 screen in employee self-service, and you can enter any necessary updates. You can see just to the right, there's a picture where you just toggle the little button and it should reload with the state W-4. For out-of-state employees, your state income tax withholding should be the state that you're completing work in. By completing work, that generally means you're being taxed where you're working. So that's going to be where your home address is, your remote office, or the military base. Employee self-service should allow you to enter your specific state's withholding certificate, but if it doesn't, just email the payroll team and we'll try to get you set up. And we could do next slide. All right, so when you become an out-of-state employee, you should be completing an out-of-state work assignment data form. To get to it, I generally just Google CSU out-of-state employee form, and it takes you right there. You can also get to it, I believe, through the Human Resources website. There should be a link on there. All employees working outside of Colorado for the majority of any month should work with their department's HR partner to submit an out-of-state work assignment form to ensure the correct state withholding occurs. So you might be thinking like, oh, this isn't too important. It affects more than just your state income tax withholding. A lot of our reporting is based off of the information that we enter from this form. So that can be your eligibility for certain state benefits like Colorado's family, where you're paying your locality taxes. So we don't have a ton of those in Colorado, but for example, Ohio has a bunch of different taxes. If you just move to a different county, you may have a different locality tax that you have to pay or have withheld, and then we have to pay it on your behalf. It also affects where you claim unemployment, which is one of the big reporting pieces pulled from your work assignment location. So on the form, you need to complete it and have it sent to HR Payroll when you move or start work outside of Colorado. Payroll updates your assignment location to the address listed in Section 3. And this address needs to be where you're going to be completing work the majority of the time. Again, this may be your home address, a remote office address, or the military base that you're operating from. Depending on your situation is which address you will be using. The form has to be signed by your department's HR professional, kind of as a letting them know what's going on, kind of keeping everybody accountable. And we can go to the next slide. If you're going to be moving states or moving within a state and you are outside of Colorado, notify your department's HR professional to have your work assignment updated to your new location. A new out-of-state form will likely be required if you're moving around outside of Colorado, just so that we're making sure all of your taxes are up to date. Update your new home address in employee self-service under personal information. Once you get an employee self-service, it's that first little link. Once you click on it, it lists all of your personal information. Go ahead and skim over all of it. Make sure that all of your personal information is correct, but particularly that main address. If it's incorrect, you can click the update button and push update through. If you're moving to Colorado, just notify your department's HR professional to have your work assignment updated to your new Colorado location. If you're moving or if you're going to be working on campus, there's generally a location that they'll assign for your on-campus location. And that there's no form if you're moving to Colorado. It's just if you're moving outside or moving around. And again, update your home address so that any notifications we need to send are going to the right address. And next,
for those of you that have students, please remember that have them updated in Banner and in Oracle. They don't necessarily talk all the time.
Very true. Thank you, Jacqueline. All right, and so we've covered making a lot of changes. We always encourage you to review your pay advice just to make sure that any changes that you make have gone through. But particularly, it's recommended to review your pay advice each time you receive pay following a change to your tax withholdings or your deductions as well, to be sure your changes had the intended effect. If you wanted to do one thing and it did something completely different, we know you need to change it before the next payroll cycle runs. If you need any help, just reach out. Pay advices are accessed through your employee self-service portal under that direct deposit management link. You'll see pay advices. If you click on that, you can view all of your pay period and year-to-date earnings, pre-tax and after-tax deductions, tax withholdings, and what bank your net paycheck went to. If you're being paid by a physical check, like if you haven't entered your direct deposit or if your direct deposit information failed to load, it will show CSU's bank, which is First National Bank of Omaha. That's because that's where we have to send our file to for your check to physically print. Once you enter your direct deposit information, it should show your direct deposit account in that section. If you are comparing previous pay advices, or if you're a student and have multiple jobs, you might have to choose a pay slip. You choose that little drop-down box, select the one you want to look at, and then be sure you click go because it doesn't automatically update. So sometimes it looks like nothing changed at all. It's because it didn't. You have to click go and then it should load it in. And a final disclaimer, we are not tax advisors. We nor any other CSU employee can give tax advice. If you have any tax questions about your specific situation, please contact the IRS or a tax advisor. A quick note for foreign nationals. Foreign national employees issued a visa should contact the foreign tax team in business and financial services.
There is a question about employees working out of state and moving back to Colorado. Do they need to update with HR or just update their address in employee self-service?
Both. So reach out and let us know that you're moving back to Colorado. Let your HR partner know so that they can submit a action to update your work assignment location. And it's always nice to let payroll know so that we can just make sure that everything gets put through correctly. And always update your address anytime you move, your home address, so that we have your most up-to-date information.
All right, I don't see any more questions, so great
Love to
job.
hear.
If questions come up again, of course, feel free to reach out to HR. Contact information is here on the screen. And like I mentioned again, the recording will be posted within a few days to our website if you need to reference it, and the link is in the chat. Jacqueline, Matthew, anything else?
I think
Perfect.
that does it.
Good.
Yeah,
Thank
thank you
you.
so much for sharing your knowledge. It's not necessarily in everyone's wheelhouse, so we appreciate your insight and helping us all out navigating the fun world of taxes. Oh, there might be one more question. Give it a second here. Okay, here we go. To confirm, if a remote employee working for CSU do not have to pay state taxes, and I'm not sure if that's referring to Colorado state taxes. Okay. So remote employees, do they have to pay Colorado state taxes?
That's correct. So you should be taxed where you're completing work at. That's going to be, like I said, if you're working from home in Minnesota. I don't know if they have income tax off the top of my head, but I'm going to use it as an example. If you're working from Minnesota and you never step foot in Colorado, you are good to have only Minnesota state income tax withheld.
Perfect. And there's a thank you in the chat for addressing that and making sure they heard correctly. Looks like folks are all logging off, so I think we're all set. Thanks again, Jacqueline, Matthew, and everyone for joining, and have a great afternoon.
Yep. Thanks,
Bye.
everyone.
Thank you.